I welcome each and everyone tonight to a webinar on trading the strongest sectors and stocks, a trader's view. Uh, a lot has happened uh, last, a month or two, and equity markets specifically. I see a lot of people from here. So yes, a lot of things have turned out to be in favor, to not be in favor. So, how to trade, what to trade, and at times, I personally, as a trader, also get caught up in situations and what things can help me to overcome. So, it's like basically sharing the experience and uh, sharing the experience as in to improve the equity of learning and improving the learning curve so that you don't have to go to that particular bumps which I as well face. So if any one of you has been part of this webinar series in the last few months, the points we made were very clear and written down here in my diary and what was being shared with everyone so that we keep a track of everything what we are sharing and it doesn't go just into get oblivion about it, right? Okay. So as I move on, let me welcome you all and myself, Lovely Sharma. I'm the head analyst of Epic Research, and tonight I'll be your host and sharing all the things that we have lined up for you. And just in case, I see a lot of questions. If you have any questions related to market, related to the stocks, please post them in the particular right side of your particular screen. There is a question tab in the webinar dashboard, and you can post your questions over there. It can be related to any particular market. It can be any stock, and I'll take my cues from there, and we'll take those at the end of the webinar. So let's begin this particular webinar, and okay, that's just. So this know the difference and how, as a particular trader, no, I think I'm audible. Am I audible to each and everyone? I see. Right, I think I'm audible. You need to check at your end. Yes. So this is the difference between a trader and other people who are engaged into the market, and that's what I show to each and everyone who become part of it, and that's how a trader should be. Hold assets for short periods of time to capitalize on short-term trades. Okay, so these are the basically three strategies that I particular as a trader follow, and you particularly as a trader or investor would look out surely for. So all of these three strategies are very important to understand because uh, it defines you as a trader, it defines you as a investor. So if you are like looking for a short term, you need to focus on the best possible trade execution and how well you follow your rules of plan, maybe your TP or maybe your stop loss, how quickly you follow the plan, that is important. So you need not mix any of this. This is difference, this is different, and this is different. So in midterm, when you talk about midterm, it's basically from 15 to 16 days to maybe 40 to 50 days. So that's about a midterm or medium term trader who's into the markets and looking to capitalize on that particular thing. So when you talk about medium term, you need to understand what you're looking for and what you are in for the market. And then it is long term, semi-annually, you have to review your trades. I mean, we're talking about 6 months to 8 months, and you don't have to look at your uh, particular holdings every single day and checking. So how well you focus on your executed trades and to get an understanding your level of professionalism. You need to find weakness in the middle and adjust accordingly. So that will, of course, lead to a profitable trading inevitably. While in the midterm, which mostly people follow, is short term because people need instant gratification and they are into those particular areas of greed and hope and fear that one needs to uh, follow the rules. If you're not, then you need instant. You take a position and you place some bet and get out with some minor losses and then cross the market. So that is because that is short term. Mid term, of course, it's a different play. So you need not to mix any of these. You need to understand three of them has a different meaning altogether, and you cannot combine each or mix any of them. So go on and review your trades and understand what kind of trades that you have done and if you are able to identify yourself as any of these. So I think most of you will fall into this because you initially people take trade for short term, that is daily or maybe maximum holding of 1 week, and when they are the things doesn't go into their favor, they specifically come down to this, not even to this. So some of them turn to this and then they turn to this, while some of them go directly straight to point 3, some of them travel from point 2 to point 3. So it's because you didn't follow the plan over here, so you have to come down here. And if you would have followed the plan here, you would have stayed in short term and week return. So I think the instant instantaneous actions and all these things lead to these strategies. Now going forward, well, so we'll straight away go to particularly uh, now I'll show you different screen here. Okay, so this is So this is some of the workspace I have, and so I'll remove my mind asset and I'll just look at the index. So last time I think we discussed it was after Malaysian election and how things are, how markets are looking. We were here 14th of May, and it was up, and there were a number of stocks that we discussed, and our initial starting point was same as well, and we discussed that um, just a sec. Right, so we were here and we saw a huge jump in the volatility, and people might have got trapped over there, and suddenly all the shares went up, and might be the gain were almost 20 or 30%, and it was kind of a trap. So we suggested that we should wait, because I clearly stated that in market, specifically Bursa market, uh, when we talk about noise is something when there is a lot of uh, traders who are trading, irrespective of the understanding of the larger trend that can be understood. So I think that was one of the points that we discussed, and we initially thought that we should be waiting and look at how things actually go in next course of day. So usually the volatility of KLAC market in, during elections, and as a statistical essence, almost they will go back to 1970s, 1980s. So that the volatility before election and volatility after election tend to be different, and this volatility has its own repercussions, because before 15 days or 30 days before election, volatility is less as compared to volatility uh, post election. Now, by volatility, I mean it's cyclical, but that doesn't mean the market tends to be bullish all the time. So it is also, you know, a kind of a signal where all the weak money gets out, and the strong money gets in, or maybe they are booking profit. So it can be anything, but we need to understand that one main thing is that volatility is high after the election. It's been almost 1 month, so it's a nice day. After 1 month, we haven't seen that kind of a movement which was expected, or which is being shown on this, all the newspapers, or all the. Right, I'll just bring it here. Now you can see. So in this particular time, if you see that KLAC has not done much but turned down with a huge profit booking. Now this is somewhat an overall very bullish trend, and at this point of time when people are so heavily invested, there was a kind of a profit booking. That is being said, the noise, or the ratio of noise in KLAC is highest in amongst Asian indices, and that's a study recently done on 10 or 13 years of data starting from 2000. So with KLAC having highest noise, you can understand that in this people focus on short-term picture of the market, while they tend to forget the long-term scenario which is in place. So today we'll look at something interesting. We'll look at all the sectors that are there and how the sectors are playing out. So we'll start off with so I have particularly identified few stocks. In this kind of a market, let's first come to stock because there are a lot of questions related to positions. So we'll come to the stocks first. How do you look at market at present, and how do you identify the stocks that are good for long term? I mean, I remember I said Nestle to be added. There was a simple concept which I'll share again, right? And then we'll move forward. I think it was 14th of May or something, right? So in this particular stock, what we identified as a trader, or how we looked at it as a trader, that there were hardly few corrections in this stock. And this is the reset. Is there any major correction? If I have forgotten to mark it out, no, I don't think there has been. These are the minor correction and the major ones. So when we looked at Nestle, normal theory suggests that any correction of in a long-term bullish trend should be bought in. And when we look at Nestle, that's the first thing that should come into the mind as a trader or as an investor. What I shared last week is that no stock, Nestle in no time has given any correction that has been more than almost 20 to 30%. Now this is 2001. You look at the kind of a breakout. This is one of the longest consolidation which we have seen from 1996 to over here 2003. Then there was some over here, but since then it has been over an uptrend. Now when we talk about correction, you see this stock has never corrected more than 20 to 30%. From 31 it came all the way to 26. That's almost say roughly 20%. Now there was a second correction from 67 to 56, 57 odd levels. So that was again within the 20% correction. So what we suggested is we should be buyer in this particular stock and any correction. Now this was 162 over here, the particular top, and this is 125. So you do the correction 124.84. So you do the calculation over here, and you would understand what I mean to say. That's almost 20%. And look at the pullback in this particular stock. I'll put in the volume. Look at this volume over here. Look at this particular volume in this particular stock over here. So when people are getting panicked and they are exiting in the loose volume and loose scenario, someone bought over here at this level. It could have been profit booking, but since it's sustaining the level, we need to understand that it completed a 20% correction, and now it's all again set to start the next bullish journey. So that this is one stock I can reiterate because it's of course a multi-bagger. There is nothing bold and big in recommending Nestle, because I think when everyone would understand why it's being recommended, that no correction has been more than 20, within 20% it has been. So this is one opportunity. You see, there was a consolidation and then a breakout after 20% correction. Stock went from 33 to 68 in almost 2 3 years of time. This was another slow moving period. In this, it gained almost 15%, but when there was a breakout, it went up again to 150. Now, this is again a correction of 20%. As soon as this stock is above 120, that's the 20% correction uh, theory. So, it is bound to go up, and I won't be surprised. So this is something which you can hold on for a longer term, or for a kind of a period where you can invest with less worries. So in this particular webinar, I'll be sharing a few stocks, and these stocks is how I would particularly look at and how I would be trading. So when we are talking about KLSE, now this particular index is not in a kind of a state where we have seen a move that is a bit beyond a breakout point, or so I'll just put it. So there is nothing big happening in this particular index, and one thing is for sure, when designing a portfolio, when you are trying to align yourself with the portfolio or with the market, uh, and specifically this market, which has not breached its previous high since 2014 exactly. During the same time, we have seen maybe Dow Jones, maybe S&P 500, maybe any other particular indices gave an astonishing rally. So it is pretty much clear that they don't follow the global indices among the emerging markets. That's point number one. Point number two is the signal to noise. I mean, the noise ratio of the Bursa is very high. It's, if I want to rank it from Japan to China to Sri Lanka, maybe Pakistan, or maybe uh, Thailand, Indonesia, from 1 to 10. And if I want to rank on the basis of noise, Bursa might be in the fourth or fifth stage, just below Sri Lanka and Pakistan and Bangladesh. So I think it's around 5. So that's nothing to worry, but that says that the noise is high. So people don't care about if I want to explain it in simple, the noise means they are looking at data in a very short term, and they're not looking at the data in a very long term. So when I say noise, the noise tends to be low when you look at this trend. If you want to take a decision based on this picture, you'll take a decision right now that you want to invest into this particular market, which has been up since 2000, 2010. But when I say the noise is higher of Bursa Malaysia, that means someone is looking at only this picture, or someone has sold because of this. So when there is a higher noise, you must understand that there are whipsaws, and it's not a market where day traders are very self-sufficient. They are, I mean, butchered, and of course, it's the big fund houses that go all the way. So Now it's easy to take a decision if I give you this picture. Would you invest in this? Suppose it's a stock and you're looking at a stock. It doesn't matter if it's 1990, 2000 or 2010. You don't look at it and you want to invest. Now it's a daily chart or maybe hourly chart. Would you buy? Of course I would buy. It's a higher top, higher bottom and it can be a bottom. So you would buy, of course, over here. Now suppose if I give you this particular scene. Now, would you buy this market? No. You don't have to look at the time, but you wouldn't buy this market because the data presented in front of you is very, very short term. You see, since only November, okay, I'll give you another option. Let's look at data since maybe 2016. Would you buy this market? Of course, it's a higher top, higher bottom, higher top. The previous bottom is secured. So as long as it's above 1705, I would go and buy this market, right? Because you have a larger number of data to analyze. So you're looking at a market and you are able to make a decision. Now, when I say very higher noise, now you look at this particular chart. Would you invest into this market now? Yes, no? Of course, no. You wouldn't. Why? Because the rationality of the decision, the rational decision here would be it's a downward market. You wouldn't want to invest. So all these things affect. Now, when I say a trader's view, when I say that this particular webinar, I kept the topic as trading the strongest sectors and stocks, a trader's view. So I've analyzed the sectors for you, but I'll be giving you the stocks based on some proprietary and some deep analysis that goes on systematically into the system and looks at 960 stocks, 950 stocks in the Bursa Malaysia from all the market components, and then it takes out and fetches out those. So which I have identified over here. So let's get started with this. And so I hope you understand what I meant by noise. You cannot invest in this particular market given this kind of a chart. Of course you would, not even me. But when I give you big picture, then of course you would because the trend is high. Now it doesn't matter if it's a double top over here or if it's a ranging market or no, I would buy because at certain point of time this particular market comes out of consolidation and breaches the previous resistance and goes up. So that is how this market behaves. Now coming back to our stocks and which stocks we should be looking at. So I've analyzed all the particular sectors and so this is construction and this is consumer. This is small cap. This is plantation. This is 100. Sorry. This is Bursa Financial Index, and good enough. I think it has covered most of the sectors. Then there is trade and services and all. Now look at all these sectors. So I'll just do one thing. I'll take out one screen over here. It will be easy for us. Right. So that's a daily chart. Daily chart with almost since 2014. Let's make it a weekly chart, so you'll be able to understand what we are uh, trying to look at. So let's start with construction index, and let's see what our ICE tells. Now look at this weekly chart. This is a daily chart. This is a weekly chart since 2013. Since now, if I would want to invest, would I be investing? Might be there are stocks that represented this particular sector that is doing well, but is this particular sector performing? Yes, in the long run, it is very long run. I mean, it almost took 8 years for this particular market to triple itself and get back to 18,000 level, get up to. But in the short term, would you be able to invest in this market? Okay, since 2014, it has been between 17,000, 13,000. Why we are analyzing index? It is one of the best way to identify the opportunity. Now, as a trader, if you want me to go and find out the best IT company, which index I would look? S&P 500. S&P 500, of course, or Nasdaq. Nasdaq is basically representing the overall IT. So the point is, I need to look at the sector that I'm focusing on. Then I'll go into the stocks. Now I'll look at construction sector. Now these are all the construction stocks within the particular sector. Now there is a way to identify, and one stock belongs to this particular space that I have identified. I will be sharing that as well. So this is a construction. So I cannot go and buy any construction stock. I mean, let's look at EcoWest. I mean, or Emerson EcoWest. Let's look at. Sorry, now link it to the particular select. Right. Is it linked? Yes, it's linked. So let's look at EcoWest. Is this particular stock that you would want to invest? No, certainly not. It has destroyed all the wealth. Now, since the particular sector has been in a consolidation and it has been down recently and it has not done any particular thing, I wouldn't be investing in particularly EcoWest. It has done the same. So I need to identify which one is the gainer. And let's look at no, Roger, no, certainly not. Crisp Builder, no. Then which stock is it that is performing? We'll come on to that. So let's look at consumer product. I've seen all the charts before this webinar, and I tell you the charts are really not. Now the consumer product as a weekly chart looks very promising. I know this chart mimics the other chart which we have just seen, and I have given a buy on Nestle. So of course, this as a sector itself is a buy. Now that was the first stock that we discussed. That was Nestle over here. So consumer product, of course, it's a buy. In all the time frame, is it easy to take a decision based on the chart? Yes, because the trend is overall up, and whenever the trend is up, I would like to put my money over there. So in the short term, you can see the consolidation. Consolidation is good, that is healthy. But look at the long term. Yes, so there's the ability to take a decision is easy for you as a trader or you as an investor. So that's how you go around. Now, when I look at consumer product, is there a particular stock that I can look at? I mean, I have seen all the stock. Salzburg, it's of course uh, cab. Yes, one of the stock that is going there. No, certainly not. Apollo Food, slow mover, but yes. CI Holding, Saudi, QL, yes. Power Root. So one stock I have already given, but there is one more stock that we will taking the from this particular sector, and we'll come on to that how we. And now plantation, there is another sector. So as a sector, plantation dead has been since 2012. Do you see any movement in this particular index? See, if the index is not moving, how would you expect these stocks to perform well? Because it has already given the best value of this of its lifetime since 1998 to 2009 crash, and that is one of the places where the wealth was created. Maybe at 1980, but I don't think anybody would be there who would have bought back in 1980. So someone might have been bought around here or here, and still stuck. So So if this particular index is not performing, how can we expect the stock to go northward or southward and give us that kind of a wealth which um, other stocks are making? I mean, who's making money then if the sector is not performing? So let's look at KL Financial. Now, this particular index is on the run, but that's maybe due to one particular stock that is generating a lot of wealth. And it's, of course, public bank. And there are some good contenders in this particular sector in the short term. So we'll look at. Now we'll come on to straight to stocks. I've seen a lot of people are raising their hands and asking for the stock. So I'll just come to the stocks and Sorry. Now, these are basically the identified stocks that we know are going to see the kind of a movement which we expect in the coming days to perform well and go positive. So, first is these stocks, they are for like almost 90 days. So, when I'm talking about 90 days, the time horizon we need to understand is that they should be uh, held onto with a 90-day perspective. So, Eden, Media Prima, uh, GSB Group, PhD, and VS Industry. So, among the 90 days, I still believe that the VS Industry is the stock that one can look at for an investment perspective because it's in a purely bullish run. And given the recent events, uh, it has done its correction and uh, it should head up now because previous correction was there and this is another correction. So this shall be utilized in VS industry. Now these are all the options, but I still believe VS industry should be the one stock. All these Kellex, Eden, Media, and GSB, I think it will test a lot of now. Though GSB is looking good, but still, if I would have to choose, it will be VS industry. Now, these are the stocks which we can look at for a 30-day perspective. And for this, first stock is Kuskapi, Eversendai, Padini, GSB, Gabanjum, and Media Plan. So these are also the stocks that are good for 30 days, and this Cappy is one. See if or Eversendai is another. Why? Because they look right because they are in a momentum which is positive. And since May, we have seen stocks losing almost 50-70% of their value. These stocks have tested toughest times, and rather than losing, they went into consolidation. And as soon as that volatility is over, they have resumed on their upward. So I think in a 30-day perspective, Ever Sendai and Kuskapi, even if I have to choose, I would choose um, Ever Sendai, of course, because of the bullish structure. I mean, if you want me to highlight it, it's a simple theory out there. It's a lower top, lower bottom. Now it's a high top, high bottom. So you expect this stock to perform well, and you should keep this stock on radar because we will discuss this stock, and I'll leave this workspace as it is so that we come back and so that was VS Industry and it was Sendai. Now let's come back to 10-day or momentum trades. Now these trades actually are the ones which gets people trapped because when I say 10 days, it's strictly for 10 days. I wouldn't go on 11th or 12th day because the system says that it has to be for 10 days only. Now, when I say 10 days, DGB Asia is one stock for next 10 days. I mean, it has to be 10 days for me. I don't know. Sorry. You look at this structure right now, and after a downward move, it has given a first run up and it has corrected up. Now we expect it to go up, but 10 days we expect this stock to test to 0.16 to 0.2. So that's the kind of a short term move which will get you around 10 to 15%. Second is Nova MSC, and the third is HSS Engineers. HSS Engineers is something which has made a double bottom now. It's kind of a tricky trade. Not everyone would be able to kind of get into it and get out. So I would, anyone who has kind of an expertise where they can. Now, why not? Because it requires very strict stop losses and it requires very strict position sizing. So it has been in a downward momentum. It's like catching a falling knife, but it's based on 10 days of scenario. So you certainly not want to engage into an uncomfortable mental play where you're looking to make money, but you only have 10 days. I mean, it's kind of a basically rule-based approach. So if even I would look at Venza and VS Industry. Carex has been up. It has lately catching a momentum, but this is something which is because of the recent upward swing, it has come into attention. But if any particular stock that is in a momentum and getting kind of a play, so I think that is VS Industry one can look at. So that's from my side. If you have any questions further, I'll for sure like to answer them.